Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, April the 10th. The year's 2022. Let's talk trading, weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And as we begin the second full trading week of April, let's just remember to have our risk management in place. Risk is the amount of money you are willing to lose per trade. Don't lose more than that per trade, so make sure your stop loss is in place and your position size is correct. Taking a look quickly at the monthly chart, you can see we're still red, and we're 119 pips below the monthly open, 33 off the low, and 152 off the high. For the weekly, all the gaps have filled. And right now, the pound dollar is in the lower wick zone of the previous week's candle. We are putting in the opening range for the week. You can see we are 72 pips below the low of the opening range for the month. 511 pips below the yearly open. And as you can see, on Friday, we made a new yearly open. And right now, it looks like we're heading back down towards the 1.3000. We'll have to wait and see what happens. It's kind of interesting. Looking left, you can see we pushed up from this level here, and then we did it here. We broke it and then came back. But if we look over at the weekly chart, you can see here there's some wick zones that we might have to test right around the 129.18 level. We'll have to wait and see what happens on that. And as far as, once again, looking at the monthly, you can see here 129.13 might be a test. Right here, looking at those lower wicks. We had an inside bar, looks like last Thursday. We're 36 pips below the low of that inside bar. But notice we've got lots of inside bar action here on the daily and the weekly, not so much on the monthly. And we actually have 3 pairs over 100 pips, and we're a little over 7 hours into the trading day. The pound's clocking in at 31. But dollar yen and the pound yen are both over 100. You can see the dollar yen's approaching that 125 level that it hit, what was it, a couple weeks ago? Buy zone, no buy zone trigger at the top, but we had a couple of short zones. We did have one close above the weekly / daily open so far. We'll have to wait and see how that plays out. Rats, caution range too low. So we're not even thinking about the rat zone. The pivot, you can see where the pivot is. Actually, let's put on the H4 candles on this chart. So price near the pivot long, price near S1 long, and you can see those 2 levels. So we have taken out the daily pivot, but we're below the weekly and still below the monthly. But 130.60. We'll see if that pivot gets taken out. We're in the lower wick zone. You can see we escaped it once. The previous day's lower wick zone. And the ranges, once again, nothing to look at really this time of day, but we can definitely compare. You can look at what happened last week if you didn't tune into the weekly wrap up. And on the simple price action chart, once again, you can see there's just no range, no real volatility. This is not the time to trade this particular method. Lower high method though, high or low, you can trade that pretty much anytime. It's just sometimes it takes longer to collect your pips. You can see here we put in a 3-ball at the bottom, came up through that 1-ball level. There was the lower high, and you can see that was good for about 5, maybe 6 pips. You timed it just right. And let's see, we were looking at the high, close, close, low, frequency distribution. And we were looking at the weekly. And as you can see, you've got a very high probable or statistical chance that price is going to be, say, at least 15 pips off the high and low. Now notice I said high minus close. We can actually change these up a bit. Here we have close minus low. And actually what we can say is we can say bottom minus the low. And we can say high minus the top of the candle. And that'll give us even a finer look at those wick zone or rat zone moves. So high minus the top, greater than 50 pips, 54% of the time. Over here, greater than 25, 63% of the time. Here, greater than 25, 74. So over the past 100 days or 100 weeks, you can see how you can take advantage of those wicks. It's a pure statistical trade. And we were looking at the various ranges, the range by month. And the one thing we were looking at before, we were looking at the close minus the open to get an idea of how many times it closed red in the month of April versus how many times it closed green. So if you combine that with the seasonal indicator, it says it moves higher into the end of April, so we'll just have to wait and see. But these are all based on statistics. And I heard something today that was kind of interesting. You know, if you participate in a game of chance, you really don't, you really can't get upset over what happens. So like if you're playing 21 and you don't get your card or the dealer gets the card and wins, I mean, it's a game of chance. You play the odds, you play the probabilities, but as far as you controlling the outcome, you know you can't. If you roll the dice, you roll 7 or you roll craps or you roll boxcars and it goes against you, you really can't get mad at the dice because you know when you put your money down that there was a chance you're going to lose. and you accept that risk, and you only bet the amount you're willing to lose, and that's what you do. Well, you see, in trading, it's pretty much the same way, even though for some strange reason we don't look at it that way. We think we can design systems and you're going to win every trade, but see, a single trade, that's not what builds a casino. A single trade or a single bet, that's not what's going to build a casino. No, it's going to be lots of bets over time where they have that slight statistical edge and they wind up raking in the money so they can build those nice buildings with the fountains and the bright lights. And so in trading, if you want to trade like the casino, you have to set up rules. You have to stick to the rules. You can't change the rules mid-play. You don't go introducing a bunch of new games. You take, sometimes somebody's going to walk through the door and they're going to have a hot hand and they're going to have a big win that night. And you just take it all in stride. In fact, you comp them a nice suite, you comp them dinner, you comp them drinks, and you hope they stay because if they stay over the long haul, you're going to get that money back and maybe then some. So that's what you have to think about when you trade. Any one particular bet, trade, when you enter, it's like you just got to realize, you know what? This one might just be a loser. I mean, you can look at this chart here and you can go, maybe I should go short right here. And maybe it drops down a couple pips and you take them off the table, or maybe it starts to go against you. Maybe you put your stop loss up here, say at 19, right above that 2 ball, and maybe it turns around and stops you out. You really can't get mad because there's nothing you can do to make price go one way or the other. And I always, kind of talk with Walmart. I said, it's just really funny. You can get in a trade, and more times than not, it'll go against you 2 or 3 pips, real easy. And it's like, how do they know? How can they do that? Because if they want for me 2 or 3 pips, each time, I'd just be raking those pips, as opposed to sitting in a trade for minutes, waiting for it to turn around. I mean, what did I just say? Maybe you see this, you want to go short, you hit that short, and next thing you know, it goes down just enough, but you couldn't have gotten out with the profit. You may have covered the spread and your commission. Then the sucker turns around. I mean, that's just one of the things that happens when we trade, and there's nothing we can do about it. So then you might try to refine the method, but chances are there's really nothing you can do about it. So what you have to do, you have to make sure your position size is proper, your stop loss is in place, you don't change your stop when the market smiles upon you and gives you a chance to take profit, you then take profit. Make sure you follow each and every one of your trading rules. That's it. And then usually at the end of the session, if your method has a winning expectancy, you'll bring in some pips. And some days it'll just go against you and you just have to brush yourself off and come back the next session. So, fellow traders, I hope you got something out of that. And I hope you had a fun and safe weekend. And, I always want you to remember and never forget, when you sit down at your trading terminal, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.